Certainly a pleasure for me to be part of your program today, and I thank everybody that's joined this call. I've got about 30 minutes today to make my case for behavioral insurance. Now, if you are currently doing individual insurance sales with Manulife and are in contact with one of our wholesalers, then you've probably heard them say something like Manulife is all in on behavioral insurance. And what we mean when we say that is that we're basically trying to transition from simply being a product provider and choosing to compete and differentiate ourselves through our focus on health and more specifically behavioral insurance. And one of the reasons that we're doing this is that it's our view that increasingly this is how insurance is being sold around the world. And that's why almost 7 years ago now, we chose to partner with the Vitality Group, who are basically recognized as the undisputed leader in the behavioral insurance space. And they helped us bring our Vitality program to the Canadian market. So what I'd like to do is basically share with you a little bit about our global experience with Vitality. So what we're looking at here is basically just a view of all of the countries that the Vitality Group has a presence in, where they have insurance partners. And they're operating in 40 countries worldwide. They've been helping people live longer, healthier lives for over 30 years. And they currently have 30 million members, 150 program partners. And they're actually seeing over 100 million activities logged by their members every month. And they're also seeing 100,000 new wearable devices linked to the program every month so that members can track their activity. So we think we've really chosen the right partner to help us be the market leader with behavioral insurance in Canada. Now, you might be wondering if it's working, and I don't typically like to use stats from outside of our market, but as you'll see in just a second, the life expectancy story in South Africa is very, very compelling. First off, the average life expectancy in South Africa is 63. And of course, that's driven by poverty, the AIDS pandemic several years ago, but much lower than the average life expectancy would be in Canada. Now, when we move to the insurance population, you can see that the average life expectancy improves a little bit. But when we actually look at a Vitality member, you can see that it's significantly higher up to age 85. And then finally, if we look at members that are fully participating in the Vitality program, doing all the things they need to do to improve their health and making good lifestyle choices, the average life expectancy is 87. So I just share that with you to basically make the point that Vitality is saving lives. And this is particularly true in South Africa, but it's also true around the world. So how does this transition to behavioral insurance align with Manulife's core values and our mission? You've probably heard us say before that our mission is to make decisions easier and lives better. We fundamentally believe that we should be helping our customers live longer, healthier, and better lives. And underlying that is a few other beliefs that we have. And one is that longevity, to an unprecedented extent, can be heavily influenced by the everyday choices that we make. We also believe that the life insurance industry is in an incredibly unique and powerful position to help our customers live longer, healthier lives. And when I say that, what I mean is we typically have very long relationships with our individual insurance clients, 20, 30, 40 years, maybe even longer. And so that gives us a time frame where, with the proper uh, program in place, we feel like we can influence our customers to make better decisions. We also think that there's a tremendous opportunity to revitalize a product category that's as critical as ever for consumers, but it's risks losing some relevance to them. And what I mean by that is that traditional insurance typically only provides real value at claim time, where the Vitality integrated policy is a policy that provides real value to our customers while they're alive. So those three things underlying our mission there is the perspective that led us to launch Vitality in the first place. So the next point I want to make and question I want to answer is, so why does it work? It works because it's a perfect example of shared value at work. And shared value, if you're not familiar with that concept, is a concept that was popularized by Michael Porter out of the Harvard Business School. So shared value basically happens when companies address social problems as well as they're driving their business objectives at the same time. And we consider insurance to be the ultimate shared value industry. When our customers take steps to live longer, healthier lives, it's obviously good for them and it's good for their families, but it's also good for society and it's good for the insurer. So that's shared value insurance and the virtuous cycle that you see on the screen. And the basic mechanics of it is really quite simple. When our policyholder experiences better, we pay fewer claims, or we at least defer paying claims, which creates better financial outcomes for the company. But we take a big chunk of that value and we plow it back into the next stage of this virtuous cycle to create the incentives and rewards that keep our customers motivated. This program only works if our customers are making longer term healthier choices and healthier lifestyle choices as well. So it's good for us, it's good for our clients, it's good for society, but it's also good for advisors. Customer satisfaction increases. We've got lots of evidence of just how satisfied our Vitality clients are compared to our non-Vitality clients. We've got advisors telling us continually that they're getting unsolicited referrals from their Vitality clients, and we know it drives better persistency. And I'll share a few details on this in a few minutes. So what I want to do is I want to spend some time talking about why advisors are recommending Vitality Plus. Last fall, we introduced two versions of the Vitality program. For the first time, we introduced Vitality Go, which is a free version of the program available to all eligible clients. And quite simply, an eligible client is a client that's 18 years of age or older, and they're purchasing a single life policy. And we also brought out Vitality Plus, which is essentially an enhanced version of our existing program. We also, at the same time, we added the Vitality program to our Manulife UL and our Manulife PAR products, and we actually enhanced our rewards partner network with a few new reward partners. So this was all done last fall as part of our Go Big project, if you will, something that we were referring to as Vitality for All. Now, ever since we did that, I've been spending quite a bit of time focused on gaining a better understanding of why advisors are choosing to recommend Vitality Plus. I mean, they don't have to, right? They could simply sell one of those products, and the Vitality Go would be part of that solution, but they're making a conscious decision to talk to their clients about Vitality Plus. So I gained a much better understanding of why they were doing that, and I thought it made sense to try to categorize the responses that I got into three different buckets. And so what I want to do with the balance of my presentation is to spend some time talking about those three buckets and providing some evidence of what I mean by that. So the three buckets are the potential impact that client participation in the program can have on policy performance. And this then becomes the lead story for the advisor, whether it's the premium savings or the potential gains in death benefit and cash value when we're talking about Manulife Par. They present a very compelling story. But other advisors are motivated to recommend Vitality Plus because they understand through their clients or may have experienced themselves the real value that the rewards can offer. The potential is there to gain more financial value from participating in the program, in many cases, than what the clients are paying for the insurance itself. And again, I'll build on this in a little bit more detail in a few minutes. And then the third bucket, something I'm referring to is just driving better business outcomes. There was a group of advisors that have been selling Vitality for a while, and they've just got firsthand experience at how it drives better business outcomes for them, whether it's, again, more satisfied clients receiving those unsolicited referrals, lower lapse experience on their term block, just to name a few of those better business outcomes. So the next several slides that I'm going to show you are just going to take a deeper dive into each one of these three different buckets. So the first one that I'm going to talk about is the impact on policy performance. And when we start talking about that, we basically have to look at it, whether it's a term insurance policy with Vitality Plus, whether it's Manulife UL or Manulife Par. And the impact on the policy performance might be slightly different with each of these products. For family term and Vitality Plus, there's upfront premium savings, 10% for our clients, but the upfront cost of insurance discount can also improve Manulife's competitive position, which is going to make it easier for advisors to choose Manulife. For Manulife UL, they also get the 10% upfront cost of insurance savings, and obviously that can be quite significant because we're now talking about a permanent insurance policy where the premiums are much larger. And because it's a flexible product, clients can actually make additional deposits into their policy, and the potential is there to grow account values even larger based on how engaged they get into the program and what vitality status they achieve. I don't think that we can ignore the fact that some clients are going to respond very favorably also to having more control over what they pay for their insurance based on their participation in the program. And that idea, that concept of consumers having control over what they pay, when we did consumer testing, that was the number one thing that they valued with respect to the Vitality program is basically being able to influence what they pay for their insurance simply through, again, the healthy choices they're making and how much they participate in the program. With Manulife Par, clients have the opportunity to positively impact their longer-term account values. We don't provide an upfront discount. What we do provide is an enhanced dividend, and I'll talk a little bit more about this in a second. So I'm going to, in the interest of time, basically talk about UL and Par, okay? And to do that, I'm going to start with UL, and I'm just going to present a little bit of a case study, if you will. So what we're dealing with is a male age 50 who's a non-smoker, purchasing $2.5 million of coverage. It's a Phase Plus policy, level cost of insurance to age 100. Now, a couple of assumptions is that during the payment period, the client is going to achieve a specified vitality status for the first 20 years and then bronze status after that. And if you're not familiar with the program, bronze status essentially means they're not engaging in the program. We're going to, because it's Vitality Plus, there is a $6 a month or $72 a year vitality charge, basically the cost of membership. In this case study, the client's going to pay the minimum required payment, and the discount on the COI charges is going to be based on their achieved vitality status. Now, I just have two screens to show you. First, let's make an assumption that this client is bronze, okay? So in other words, they receive the initial upfront discount, but they may not even register their policy, right? They may not engage in the policy, and I sometimes refer to this as the worst case scenario. But if you look at the screen, you can see that the minimum annual deposit for Manulife UL without the vitality discount is $34,698. But because they're choosing Vitality Plus with that 10% upfront discount, that minimum annual deposit drops to $31,302. But all of a sudden in year two, they don't engage in the program, so they lose that discount and they go back to basically paying the same cost that a client would pay for Manulife UL without Vitality plus the $72. But the real takeaway from this slide is that in this worst case scenario, because the upfront savings were so significant, they continue to actually be ahead, if you will, be in the green, be ahead of the game. As you can see, even after 20 years, they're still in the green by almost $2,000. And if we go right out to age 85, they're still in the green. So the takeaway is in the absolute worst case scenario, they're still ahead. So the question that I have to ask is, why wouldn't you show this, right? There is absolutely no downside. And I emphasize again that this is the absolute worst case scenario. But why don't we take a look at what happens to a client that actually participates in the program? They achieve gold vitality status every year for the first 20 years. Now, again, looking at this visual, you can see that they get the 10% upfront discount, just like they did with on the previous screen. But you're also seeing that because they are participating in the program, they basically maintain their discount. When you achieve gold vitality status, you maintain your discount, and they do that for each of the first 20 years. If you go to the far right-hand column, basically what you can see is if you looked at the end of 10 years, there have cumulative savings of almost $34,000, and go out to the end of 20 years, almost double to $67,000, almost $68,000. Now, again, at the end of 20 years, they stop participating in the program. They achieve bronze status, but even at age 85, they've almost maintained that same cumulative savings that they achieved at the end of 20 years. So I'm just trying to show you that in this particular bucket, where advisors are positioning the product with their clients and their focus, their story is that compelling story around savings, the potential for premium savings and control over what the client's paying for their insurance costs. It does make a very compelling story. If we go to a Manulife Par scenario, basically what we're talking about here is what happens to the death benefit and the cash value when clients engage in the program and they earn a higher vitality status. What are the possible outcomes? So maximum participation, if you take a look at that line, that's essentially about 110% improvement in death benefit and cash value. Zero participation, there's no downside. Zero participation is essentially the same performance as a Manulife par without vitality. And I will sometimes have advisors tell me that, it seems a bit unreasonable to expect that clients would stay gold for 20 years. My comeback to them is it's just as unreasonable to expect that they're not going to engage in the program and that there won't be any improvement in the long-term values. The real truth is that it's somewhere in between, right? Depending on just how engaged the client gets in the program. But again, virtually no downside, and they have the ability to impact their long-term account values. So that's finishes the first bucket. Now I want to talk about how rewards offer real value. Now, when I talk to advisors that like to talk about the rewards, they typically do that because of direct feedback they've received from their clients. And they turn that feedback into storytelling, if you will, where they share their clients' positive experience with new clients and prospects. So what am I getting at here? First thing I want to mention to you is that these rewards are totally in addition to the policy enhancements that we already looked at. These clients are also receiving the upfront discount and the opportunity to improve longer-term values. But Vitality isn't a rewards program. I've heard that said several times, and I just want to emphasize that it's a wellness program, not a rewards program. The rewards are simply there to provide the incentives and the benefits for our clients to stay engaged. Now, when we start talking about the rewards, there are several of them, and I don't have time today to go into a lot of detail, but we do provide a free annual health assessment through our partnership with Exam One. We provide discounts on travel and vacation accommodations through our partnership with Expedia, discounts on healthy apparel. We've got a relationship with Saucony. Discounts on wearables, whether it be Apple, Garmin, or Fitbit. We have a robust Apple Watch program. We also provide a choice of a free Garmin or a Fitbit fitness tracker to all our members up front. We've got a healthy food partner with HelloFresh. We provide a discount on gym membership through our partnership with GoodLife, and gamification features where every month and or weekly, clients have the opportunity to earn gift cards or maybe vitality points. And there's even more to it, but I just want to kind of give you that overview. And when I look at the rewards, they kind of fall into three different buckets again, if you will. There's sign-up rewards. These rewards are available to all of our members simply for registering their policy, completing their 20-minute vitality health assessment at the beginning of their vitality journey. Then there's engagement rewards, where part of the Apple Watch program is based on engagement in the program, as well as the gift cards that I talked about. And then finally, there's several rewards that are driven by a member's vitality status. Now, I don't expect you to analyze these numbers, and we don't have time to go through them. But what I've tried to do here is just provide real examples of the kind of value that clients might achieve through their engagement in the program at the various status levels. And what's really interesting is even for clients that don't actively participate in the program, because of those startup rewards, they can actually, if you total those up, I'll do it for you, it's over $500 of value. If we, in the interest of time, just go over to gold and platinum, if you totaled up the value of those rewards, for gold, it's over $1,100. And for platinum, it's over $1,800, almost $1,900 in value. Now, the reason I share this with you is just to demonstrate that, again, for some advisors, they've got some very compelling stories from their clients about how they've participated in the program and how they've enjoyed the rewards. And in many cases, as you might have heard me say earlier, these rewards can add up to more than what the clients are actually paying for their insurance costs. So now I did that the old-fashioned manual way, but we actually have a calculator that's available on our public site. It's also available on our advisor portal, and it's really, really cool. It's really simple to use, and advisors use it in a couple of different ways. They might use it in the initial sales conversation to just demonstrate to a prospect how easy it is to achieve a higher vitality status. There's a eight question questionnaire built in. Client answers those questions, and they basically can determine what vitality status they are. And then from there, they can actually look at all the various rewards based on their status and get some idea of how much value they can extract from the program. So it's a great way to help reinforce the sale, and it's a great way, even on policy delivery, to do the same. So I just wanted to share with you that tool is available. So I'm going to have to move quite quickly here in the interest of time, but that third bucket was the fact that selling Vitality Plus can drive better business outcomes. We surveyed advisors that were basically quite familiar with Vitality. It was part of routine recommendations that they're making to their clients. And you can see some responses that we received from that group. 75% of them said that Vitality provides them with new opportunities to engage with their clients. And it absolutely does, because whether it's a client achieving a higher vitality status, whether it's them ordering a wearable, enjoying one of the rewards, there's ample opportunities for clients and advisors to connect and talk about that experience. And oftentimes out of that comes other cross-sell, upsell opportunities. 66% of the advisors we talked to said that they appreciated the fact that recommending Vitality provided a point of differentiation. There's nobody else selling this kind of a robust behavioral-based recommendation in the marketplace. So they really appreciated that. 63% said that it helped them to grow their practice by reaching new markets. And for many of our advisors, what that meant is a lot of them had stopped dealing with really younger clients, the children of their older clients, for example. But the Vitality program just sort of brought this whole new perspective to talking about insurance, and it has a lot of appeal to younger clients, so it opened up new markets for them. And then finally, 55% said that it was making it easier for them to have upsell, cross-sell conversations with their clients. We've looked at our business since 2016, so almost 7 years worth of experience. And what we've found out is that Vitality elected policies have a 22% higher face amount than our non-Vitality elected policies. They're 50% more likely to own a critical illness insurance policy, which I thought was really, really interesting. When we looked at our term block over that same period, we had a 50% lower lapse rate for our Vitality policies versus non-vitality term policies. And we also found out that the clients that we surveyed said that they were 23% more likely to recommend their advisor through providing unsolicited referrals. So just to close things off, I don't think we should lose sight of the fact that improvements in our clients' health is what this program is really all about. I've talked about premium savings. I've talked about rewards. I've talked about good business outcomes for advisors. But at the base of the program is the fact that our clients are changing their behavior and they're seeing significant improvements in their health. Just if you go to the bottom of the box on the right-hand side of the screen, when our clients do that free vitality health check through exam one, those are verified results. Those results are sent straight to Vitality. Our clients can earn points for it. But what we've seen is they've gone from not qualifying for the points because their readings weren't in a healthy range to where they were in a healthy range. As you can see, 20% reduced their BMI into a healthy range, 32% improved their cholesterol, 56% improved their blood pressure, and 85% reported in-range glucose readings. These are the 4 biometric tests that we perform as part of that free exam one health check. So I am out of time. I know it was sort of a quick overview. It didn't have anything to do with how the program works, how to sell it. It was more about why. And I appreciate your time. If I've caught your attention at all, talk to your Manulife wholesaler, right? They're would be really happy to hear from you and help you figure out exactly how the program works and how to talk to your clients about it. So Wendy, back over to you. Again, thank you, everybody.